Trading tip of the week, volatility. You know, we're seeing it day in, day out if you're trading. Uh, and just remember, high volatility, the higher the volatility, just reduce your trading size down. And then that allows for you to have a wider stop, but without increasing the potential loss. And that last bit's really important, without increasing the potential loss. So you can have your stop further away, but you've got to reduce your size so that you keep those losses under control. And of course, you've got to make sure that if you're doing that, that then you can get at least twice what your potential loss is going to be in profit. You know, you can't ask too much from the market. Well, at the moment, you almost can, I would say, but you shouldn't. You know, you've got to be a little bit more cautious, a little bit more sensible about this. And so, but you've got to keep that risk reward ratio. My minimum is 2 to 1. I'm looking for more, and often I will get a lot more than that. But that's my minimum. If I can't see that I can get at least twice as much profit as my potential loss, I just don't accept the trade. Stop losses, keep them in the market. These markets are very, very active, just moving so fast. Yeah, sure, you're going to get stopped out at times, but you know, there's going to be times when it bounces and you go, oh God, why did I put that stop loss? Other times you're just going to see it keep going and going and going, and you're going to be thankful you had that stop loss in. So, you know, it balances itself out over time, and probably more on helping you rather than not helping you. So just remember, keep those stop losses in the market. And of course, the other side of that is when you've got a good profit in that trade, protect some of it, lock it in. Again, depending what size you've got. If you've got enough size on, just take it off piecemeal. Sell a little bit, 10%, another 10%, another 10%, whatever pace you want to go at. Just make sure you lock some in, because you never know when these markets are going to turn at the moment. But of course, if you do it gradually, then it gives you a chance to try and again maximize those profits and get a really great average from the trade. You know, we need the winning trades to pay for the losing ones, for sure. And we all get those as well. And of course, you've got to know when to stop on the day. Now, you know, for me, if I have 3 losing trades consecutively, which is unusual, I stop, I reassess, work out what's going wrong. If I can't work it out, I don't trade anymore that day. If I can work it out, I'll have a small trade, but it doesn't mean that I'm going to go in. And going back to locking profits, I'll keep pushing my luck until I have a losing trade. Once I've got past all of the type of revenue I'm comfortable with. Same as I teach all my guys, you know, through the courses. Keep going, you know, push your luck. Don't risk too much, but push your luck a little bit. Until you have that one losing trade, and then that's it, you're done for the day. Your luck run out, stop. And hopefully, you know, you've ended up with a lot more on the day than you would have expected. Never say to yourself, oh, I'll just have one more after that first loss, because goodbye all your profits. So, you know, just accept it, just appreciate it, and then tomorrow's another day. Okay, so now we're going to move on to the analysis. As usual, just selected a few products. To be honest, they're mainly the ones that I trade and look at, so that's why I use them. We're always happy to look at other things if you would like to contact us, and if it's possible. Just a reminder, black numbers on the right hand axis are support resistance levels, and they will be from trend lines. Brown numbers are breakout levels, so if it gets through there, the expectations is it will continue. Claret numbers, sort of the ready numbers, they're the horizontal ones, and they're just based on 2 or 3 tops or bottom, or where I feel that there's a bit of congestion which is going to create support or resistance. Fibonacci colors are on there as well, on 2 of these today. So, you know, I've tried to put these on to give you a little bit of insight and all that. So, you know, don't be lazy. You know, I'm doing some for you, but put them on yourself. You know, once you've established that move and it starts to go in the opposite direction, that's when you can get your Fibonacci's on, because what you're looking for is first of all, is it a retracement or is it a reversal? It remains a retracement until it goes through the golden ratio. And then the potential is it's not a retracement anymore. It is a reversal. So that becomes very important, and especially when we're looking at the stock markets and the way they're coming down. They're still well up on the year or the last couple of years since COVID hit, but we've just got to be mindful that they are trickling down, sometimes faster than others, but in that bear trend. So how far will they reverse? So here's the Dow Daily with the Fibonacci. I've only put it on the first couple just to give you a little bit of a clue. And then what I've done is I've actually gone over those levels with the horizontal lines. And I've done that just to make it clearer to you. So for the fibs, so at the moment, because it's broken through F1, that effectively becomes a resistance level now for the moment, and that is at 29,670. And then F2 is a support, which is 27,474. And below that, we've got F3, the golden ratio, which is 25,248. Sure, it's a long way away at the moment, but it can get there. So, and just remember, the low was created in March in 2020 when this big sell-off came. So I've used that against the highest prices, and my system automatically gives me the Fibonacci calculations from that. Okay, so here's the daily without the fibs on. Managed to get one support, one resistance on there, but as you can see, it is that downtrend that we've got at the moment, and therefore I've got 31,593 as resistance, 28,762 as support, and then drilling into the 30-minute. Again, some more levels. So resistance at 29,291 and 29,046. With support at 28,761. So you can see those lines. You can see some are trends. A couple of them are horizontal. Moving on to the S&P. Again, I've added the Fibonacci for this one. We are through that first, the F1 level on the Fibonacci's. So it does become a resistance. So that's at 38.01. F2 lower down in the market at 34.93, and below that F3 the golden ratio at 31.80. Again, we've got that downtrend. So here we're seeing multiple levels of resistance. One quite high up, but you just never know with these markets if they're ever going to have a crazy move one way or the other, which is why I sort of put all the dailies in to go with the 30 minutes and such. So resistance 4,044, then 38.45, and the nearest one 37.33. Support at 35.94. On the 30-minute, not too much on the resistances. I've put 2 or 3 levels in. Again, just really from those vertical level, horizontal levels. It's difficult to get sort of any decent trend line on a 30-minute. So 37.11, 36.32, and 36.12 I see as resistance at the moment, and support at 35.92. Now, one thing to bear in mind is I do this analysis on a Sunday evening before the markets reopen, and that's allow us to get it posted nice and early for you guys on the Monday morning. So, just bear that in mind. That's why I sort of go, oh, he's put that level on there, but that's already been broken. But that's why, because I've already done it, but it's before the markets reopen. Okay, so moving on to Nasdaq. Again, we've got that nice downtrend line there. Now, if you need the fibs, you can put them on. I'm sure your system will have that anyway. if there's a problem, let us know, and we'll try and add more. And you know, they are important to add on. I just haven't bothered to put them on every single one because then it gets a little bit confusing for people that are new to trading. So here I've got a nice downtrend. I've put a couple of other resistance levels in there that I can see from, you know, pretty much from lows that have now turned around and going from support to resistance. So on the daily, I've got resistance at 12,306, 12,176 and 11,612 with support just over 11,000 at 11,022. On the 30-minute, I can see resistance at 11,205 and 11,082 and support at 11,020. So the support on the daily and on the 30-minute, pretty much the same levels there for the Nasdaq. Moving on to the Russell. Remember, these are the small and mid-cap companies. A couple of sell levels above, and then we've got a downtrend based on the daily at the moment as well, as we have with all of the, obviously, the equity indices. So resistance 1866, 1802 and 1716 with support at 1639. And bringing in the 30-minute resistance at 1689 and support at 1667. Here we go with currencies. So the pound against the dollar. The dollar strengthened and strengthened, and the pound weakened and weakened at the beginning of the week, and then it was all turned around, and then the dollar started to weaken more than the pound gaining. You know, there has been some expectations that the government might sort of dial back some of their intentions to cut rates to go with the power caps. Personally, I don't see it. You know, it's a new government, well, a new head of government. Everyone's got their new positions within that government. I can't see her starting to backtrack so quickly. It's really, really not going to look good for her. But then on the other side, you know, there's a lot of her party that are unhappy with what she's done. But they can only blame themselves because they elected her, which is more than what we did. Okay, so on the daily for the pound against the dollar, I see resistance at 112.52 and support at 103.17. Again, very close to its all-time low. And on the 30-minute, I've got resistance at 111.80. I've got support at 110.34 and 108.96. Now, you know, it's going to be a volatile week still. Okay, there's not much data out, but sometimes, you know, investors, traders will try and take advantage of the fact that there's not too much to influence the market and do it themselves. And of course, you know, just keep an eye on what the government says this week, and the Bank of England as well, and the Fed, because, you know, between them, they're going to effectively determine which way the pound goes and which way the dollar goes. You know, the dollar's had such massive strength over the last 2.5, 3 years that, you know, there hasn't been much profit taken on it, to be honest with you. So, you know, you've got to expect to see a little bit, especially when it gets to record highs against other pairs going to record lows, obviously. So, you know, it doesn't mean that it's a complete reversal. It's just maybe a correction, end of month, end of quarter profit taking. So again, you know, don't get to, just be that little bit cautious about buying dips on some of these currencies against the dollar. Here we are with the euro daily, and you know, it's good if you're trading the dollar or you're trading pairs like this to have at least 3 pairs listed. And that way, at least you can see if it's the dollar influence or it's the paired currency that's having the move. It's much easier to see that. Or, of course, just watch the Dixie, which is the dollar basket as well, the dollar index. And of course, the euro traded below 0.96 against dollar at one stage. I see resistance at the moment at 1.0077 and also at 99.12, 0.9912 that is obviously, and support at 0.9574. On the 30-minute, I've got more resistance levels at 98.73 and 0.9862. Support level 0.9765, 0.9739, and 0.9592. Just remember there's lots of central bank speakers this week, including the Fed. So, you will see some volatility, even if there's not much data out. The moment they start to speak and confirm what they're looking for, it will have some impact on the markets. Okay, moving on to Bitcoin. When you look at all these moves in the markets, everyone used to say crypto and Bitcoin was the most volatile thing in the world, and yeah, for a while it was. But when you look at these ranges that it's been in, okay, it's it's $2,000, $3,000, $5,000, but it is going sideways. It's ranging. So it's the rest of the markets that have become a bit more erratic, shall we say. So on the daily, based on that, I just keep this in here as a reminder. This 27,440 as a breakout level. It's nowhere near there, but it can become volatile at times. Below that, I've got resistance at 25,991, and below that at 20,550, with support at 18,105. On the 30-minute, I see resistance at 20,355, and below that at 19,685, which is where it got up to on Friday. So let's see how it opens tomorrow. Remember, I always focus on the futures markets when I do all of this. And support, so support on below that, we've got 19,272 and 18,535. So again, emphasizing all this analysis is based on the futures contract. Okay, Bitcoin versus Nasdaq Daily. I mean, look at it. Correlation was there, tracking each other. And now that correlation just seems to have changed with this aggressive sell-off of the stocks, while Bitcoin's just been consolidating. Let's see how it goes next week. Hopefully Bitcoin stays up here, because it'd be great. I'm a fan of crypto, digital assets, going into NFTs, metaverse, etc., etc. So that's for another day. But yeah, I'm a big fan and invested a lot in those. Now, with the stock market coming down like that and crypto going sideways, we are seeing a little bit of a break in that correlation. It doesn't mean it's going to stay like that, but again, just don't get quite so influenced by them at the moment for what Nasdaq's doing to your expectations of Bitcoin, which demonstrated in that chart. Okay, moving on to commodities. So with gold, we saw a little bit of dollar weakness towards the end of the week, and that added to investors exiting risk, and they also saw gold giving it a positive week. It's still a long way off from the highs. I mean, it was over 2,070, almost 2,080 at one stage, and here it is below 1,700 still. And it had reasonable range last week. 1620s up to 1680s. And so when we look at it for levels at the moment, I've got 1705, and then I've got that downtrend, which has become pivotal now. So it's 1659, but if the market's above, it's going to be a support. If it's below, then it's going to become a resistance again. So it's going to be an interesting line to see how that develops this week. and the further support at 1607. Moving on to the 30 minutes, some more levels coming in there. So identified a couple of trend lines and a couple of some support lines on the way down. So I've got 1676 and 1674 as resistances, close together, but two completely different lines I've got in there. And for support at 1668, 1649 and 1623. Last but not least, WTI. Again, oil it fluctuated during the week, $7, which sounds a lot, but probably for oil it's not actually that much at the moment. The low was when it hit down into the 76s, and it almost rallied all the way up to 83. So, yeah, that range is still there. It's is it fair value? It's really going to depend what happens with Russia. It's going to depend what happens with weather, tornadoes out in the US. It's going to depend on what happens with this recession. How quickly is it going to arrive, and how deep is it going to be? Is supply going to be too much, or is demand going to manage to hold up? And it's a big question for oil, really. I trade a lot of oil, but I've got in my mind what I want to do. But you get to these sort of neutral levels in the market where I guess you'd call it fair value. So as I mentioned, so resistance is 90.35, resistance also at 88.26, and so a little bit higher up, and then support back down at 76.87. And then the 30-minute, where I can see resistance at 82.24 and also at 81.22, and support at 78.06 and 76.49. So that's the analysis, and as usual, obviously we'd like to promote ourselves and tempt you to join us on some of these other areas that can help you either to get into trading or help you to improve your trading. I've been trading almost 50 years, so I've got a lot of knowledge and trading skills to pass on. We do a daily newsletter, and of course, you've got this weekly one, which is great, but things do change during the week. So we've got the daily newsletter, which is delivered directly to your inbox each morning, and that includes global news, then daily chart levels, and fresh pivot points as well. And there's a link to that. And then below that, we've got the workshops, one-day workshops, just to help you tighten up on a certain area that you may need some help with, or a trading for beginners to get you into it. Courses, 1 week courses, and they're really great to give you strong, quick foundations. Maybe you've only got 1 week to spare. If you've got more, then come to our masterclass. That's 4 weeks of guided learning, but you can spread them out. You don't have to do them all in one go. And of course, if you pass the exam at the end of that, it's an accredited course, and a further challenge that we set, we'll actually happily offer you a job working for Symax Prop Desk, our trading prop desk, where you can trade any asset class. We teach and train on every asset class because we're trading them all. And then beyond that, there's trader mentoring. So whether it's for an hour, half a day, or a full day, or month on month, I provide a lot of trader mentoring to help people continually reach that next level that they want to get to. We consult to lots of companies. A lot of that is around hedging. We also provide trader education, obviously to individuals, but also to exchanges, brokers, and even their employees. Now, to contact us, very simple, info@symaxfintech.com, or if you've got a question around trading that you would like to ask me direct, then feel free just to reach out, chris.tubby@symax-int.com. I'd love to hear from you. Questions, suggestions, anything at all. Always around to try and help as much as possible. Have a great week. Just remember NFP on Friday. Now with NFP on Friday, yeah, you know, for me, I always look more at the other data than I do at the actual NFP number these days. So I'm more interested in the earnings. I'm more interested in the hours worked and such like. You know, that number with you know, US unemployment 3.7%. You know, it's be expected to stay around there. That, you know, the other data becomes more important because it can fluctuate more. And listen, have a great fourth quarter, and obviously a great week next week, and look forward to seeing you in a week's time. Thanks for now. Best of luck. Goodbye.